Our top story this half an hour, U.S.-China trade. Treasury Secretary Steven Mnuchin and Trade Representative Robert Lighthizer are in Beijing this morning looking to lock down a deal with China. Before they left, Secretary Mnuchin told me yesterday in an exclusive interview the U.S. wants a big trading relationship with China.
We want to have a reciprocal trading relationship. And if we can do that, that's a tremendous opportunity for U.S. workers, for U.S. companies to sell into a large, growing China middle class. The president is determined, and tariffs have been a big part of getting people to the negotiating table. But the president's objective is to make sure we have fair and balanced trade.
The world.
Yeah, but meanwhile, the manufacturing activities slowed down in China in the month of April. We had the PMI, which was lower than expected. Joining me right now is EY CEO Mark Weinberger. And Mark, it's always a pleasure to see you.
Great to see you, Maria.
Thanks for getting up early for us for our conversation this morning. I want to ask you about the broad economy, the tax cut plan, whether that has legs. But let's start on China right now, because you did see some slowdown there, and we are in the midst of perhaps a deal. Do you think we'll get a deal with China?
Well, you, like I, were here, and the Secretary was here before his trip over to China, Maria, and he seemed optimistic that things were going in a good direction. We've gotten here before, though, and it's got to the lip of the cup, hasn't fallen in. I think the momentum suggests that we'll get a deal. There's incredible mutual interest in getting a deal. I think the business community is really excited about the prospect. If it doesn't happen, I think it'd be very disappointed. Yeah,
I mean, the markets definitely will be disappointed. But, you know, these are two very different ideologies, capitalism and communism. You know, you want to have a partnership with the second largest economy, obviously, but you also have to worry about certain things like the espionage issue, the forced transfer of technology issue, the IP theft. Those are the issues that I'm wondering if we'll be able to get over and get to a situation where China buys more goods.
Well, I think they have to. I mean, right, we know the world has to trade. We know that you look at the iPhone itself, it's made in 30 different companies across 800 different, 30 different countries across 800 different companies. And, you know, so that supply chain needs to be able to operate. Business needs to be able to operate in China, in the United States, across Europe. So I think the mutual interest is going to make sure businesses continue to work together, and the governments will, too.
I'll be focused on this because I want to see what they're also going to do about Huawei Telecom. The U.S. has been warning that, you know, this is one of the vehicles with which to spy on the West. So we'll see. I thought it was really interesting that this year's theme at the Milken Conference is driving shared prosperity. You were on a panel yesterday about this, speaking about the topic. Tell us about it, and tell us about this idea that capitalism is working. However, people are now talking about socialism on the left and defining, or refining, rather, capitalism.
Yeah, it's really interesting here, as you suggest.
To address income inequality.
Right, and Davos earlier in the year, we talked there too. Many of these places, you're hearing talk about purpose, culture, income inequality, not just GDP growth, but income per capita, and spreading it across a broader breadth of population. I think there's a real recognition, Maria, that the business community has to step up and play a role in driving the shared prosperity. We can't just leave it over to government or leave it to anybody else. I mean, our license to lead depends upon strong communities, upon our stakeholders, not just our shareholders, all recognizing that we're trying to do things good for our business, but certainly good for the communities. And so I think you're going to see a lot more talk about this. It was very encouraging.
How do you do it? How do you make changes on the corporate level to address that?
Well, you can't just do things at the corporate level. First of all, we need to think longer term. You're hearing Jamie Dimon and Dalio, a whole bunch of other people talk about businesses need to think longer term, not just quarterly earnings. So you're seeing that. You're absolutely seeing that. It's good for investment. It's good for growth overall. It's good for sustainable growth. But also seeing the business community play a role in educating our employees. And we spend $500 million a year, every year, 13 million hours, educating our employees, reskilling them, helping them be good in the workforce, hopefully at EY, but if not for us, training them to go out in the world. We have 1 million alumni around the world. Businesses are now coming together and working at the Business Roundtable and elsewhere to work with universities, upscale their curriculum, train people for the jobs of the future. Those type of things business can really do to help bring people into the workforce.
This is really important, particularly as technology makes its way into every industry. We're seeing AI, computer learning. People need those skills, and the skills gap is real. But it should be happening now during a strong economy. You talked a bit about the backdrop yesterday as well in the economy. I want to get your sense of that. You speak to obviously so many corporations in terms of your customers. Do you think that the tax cut legislation that we saw last year, that was a really nice sort of tailwind in terms to growth, does that have legs? Are you going to see a long runway on that?
Yeah, it's a great question. And first of all, I'd say you started with China. If we don't have a strong China and U.S. growth, it's hard to have good global growth. So if those two countries are doing well, the general view is the economy is going to do very well. China has become, as you indicated, it slowed down a little bit, but it upticked from last year when it was much slower. They have a lot of tools at their disposal. In the United States, the tax reform was talked about initially as a sugar high. That was never what it was meant to be. It is a long-term readjustment for businesses to be able to invest in the United States and foreign companies to be able to invest in the United States in a more competitive way. For the first time in 2018, in 13 years, we saw U.S. businesses bring more money back to the United States than send overseas. We saw growth in capital investment. We have employment at the best level in 10, 15 years. We have wage growth that's strong, even with the modified inflation. A lot of that is attributable to the increased business environment in the United States, certainly due to the tax reform.
And, you know, everything you're saying was helpful for all income levels, the broad economy, and yet the tax cut legislation has become a talking point for some of the candidates on the left saying, oh, this was done just for the rich, this was done for the top. You've analyzed this tax package, and you say what?
Well, there's no doubt that this is beneficial to across the spectrum. Now, the business, the jobs that have been created, the wages that have been increased, the people don't tie that directly to the tax cut. But that is the sole. We talked to Marilyn Houston from Lockheed Martin was on the panel you referenced yesterday, talking about plowing $100 million back into training for her workers directly from the tax relief. You're seeing pension funds be refilled up from the tax relief. Healthcare paid for more benefits. R&D investment went up last year tremendously. CapEx 20% increase over the last year. Those things drive growth in jobs, growth in wages. People don't necessarily tie it back to the tax cut, but it's absolutely driven in large part by it.
Yeah, because if you've got businesses investing in the economy, ultimately that just cycles through.
Absolutely. So a lot of focus was on the share buybacks and whether that was the best thing to do with the money. That's the easiest first thing to do. The supply chain changes that are coming once the trade issue, which is really making it harder for businesses to decide, slowing down their decision making, as you would expect. Brexit is still a big hangover issue. When those things clear up, then will be even more certainty and more investment. The supply chains will start to change. We'll see greater investment, I believe, in the U.S. on the margin and across the world.
And when you look at, you know, capitalism versus socialism, you would think that kind of a backdrop lift many boats out of poverty.
It will. But, Maria, you know, we're in the silly season of coming up to an election. So yes. Socialism, capitalism, those are big, you know, overall statements. Yeah. It's going to be really hard to make any of those major changes you're seeing the Democrats propose. I think they're just trying to stake a territory out there.
A lot of slogans going around.
Yeah.
Mark, thank you so much.
Always a pleasure.
Great to see you.
You too.
Mark Weinberger from EY.